Hey guys, what's happening? Jay here. This is smarthelping.com. We are going to dive into the multifamily acquisition real estate model. Today, it's already a built model, but I wanted to talk through it and play with a few things on it to explain more about one specific thing, which is the going in cap rate. Now, the going in cap rate is going to be some function of a adjusted net operating income against the purchase price. So in this model, you can see the purchase price is right here. In this case, $50 million dollars in the acquisition and unit mix tab. And then we have on the pro forma four different cap rate going in cap rates. And the reason why it's important is you want to know, you want to know the cap rate of the existing operations, but you also want to know if you stabilize the property, what is your cap rate against their purchase price in that scenario? If there's a huge value add opportunity, it might affect how much you're willing to pay right now if you think you can get improve the net operating income to a point where the cap rate is high enough that it makes sense. And again, the cap rate, the higher the cap rate, the lower the purchase price. So it's essentially just saying, well, obviously as a buyer you want to buy it. If you want a property, your goal is to buy it for the cheap, uh, lowest price possible, which is the highest cap rate you can get. So in this model, let's talk about how we're calculating these things. So first we have three going in cap rates over here based on historicals or a manual input for expenses. So if we look at historicals, we see the net operating income is going to be based on, in this case, we've chosen the T12. So it's going to give us basically the existing operations, what was all the different rent and expenses that currently exist, and then the net operating income is just subtracting the expenses from the effective gross income, and then we get 3.1 million in this case divided by the acquisition and unit mix input, which is the purchase price. So 6.35. Then we could say, well, what if we want to measure the same rent and income against a different set of expenses and see what's the going in cap rate at that point. So we've got also a manual input for expenses scenario. And here you can see on the OPEX, we're basically just looking at these three expense scenarios against the T12 revenue. So the manual input allows you to manually input some of these different assumptions to come up with the expenses versus the T12. And then we'll also do historical plus, which is just the historicals, which is T12 or whatever you select. You could do T1, 3, 6, or 12. And then plus or minus a percentage on those to get the historicals plus. So you have all three expense scenarios against the existing rent. And this might be useful if you think you can cut out some expenses, or if you think you're going to have to increase some expenses for whatever reason, um, relative to the existing expenses, and you can see what that looks like against current rent. So those are the three going in cap rates for historicals, basically against the historical income. Then we have a stabilized going in cap rate. Now, what's that mean? Well, now we're going to look at so if we look at gross potential rent, we're going to start on the acquisition unit mix cell 058, which is the market rent. You see here, annual market rent. So this is if all the units are whatever the market is for each unit, if that's what you're getting, less the loss to lease. So that means your forward assumption C16 is going to tell you what's your stabilized expected loss to lease, which just means your percentage under the market rent you think you'll charge. So for stabilized, I think, this is the max market rent. We'll charge a little bit less maybe on a long-term basis. So you've got your stabilized net potential rent. Value add premium will be added. That's if you do renovations and you expect to increase the rent of different units based on these assumptions right here. Renovation value add unit per month. So we're going to include that. We're going to look at then economic vacancy, concessions, bad debt. So all of these are just based on the forward assumptions stabilized. So these percentages here, which you can see stabilized assumptions. So we're just trying to create what we think the property is going to do in 12 to 18 months or 6 to 18 months, somewhere during that first initial part where you're trying to get rents up to market as much as you can, um, get the value add premium for units, and apply these assumptions to get a total uh, new effective gross income. We'll also have other income items, which is just going to be driven from our other income section on the main assumptions tab here. We've got some fixed and some per unit revenue items you can configure. You can also, in this section here, is driven by all of these granular inputs for the different unit types. So maybe you're going to add some other ancillary income that could help boost your NOI a little bit. So we finally have the stabilized effective gross income, and then we want to see what's that going to look like. Now for stabilized expenses, we're just looking at whatever we put on the OPEX, whatever we're going to use here. So you might use the manual input, historicals or historicals plus, and we're just going to compare all that revenue I just talked about, how we're populating all those different revenue items against whatever expenses we choose on the OPEX tab, and that's going to be our stabilized NOI. So in this case, we think, we're going to raise rents. We're going from about 5 million a year to 6.4 million, and expenses, this is 1.8. This is your manual input amount, because that's what we've chosen here. If I switched it to, say, historicals plus, it's now a different number, 2,022,000 for the expenses, whereas before it was 1.8. So on the manual input version for stabilized, we're at a 9% cap. So that's a little bit higher, meaning that the purchase price is lower compared to the net operating income. And this is just one part of the underwriting multifamily model I've got here. But I thought it would be good to focus on just one thing, one aspect of the model that I think is pretty important. Uh, and there's also all kinds of other things here to look at, but I think going in cap rate is a good place to start when you're looking at buying multifamily properties. And I can't say what's the best going in cap rate you can get. It really depends on every single situation, and what you think you can turn it into, and then what do those economics look like. When you look at, say 5 or 10 years out, and you look at the debt and maybe different exit scenarios, and get a good idea for your returns, your debt service coverage, and all of those things are all relevant in the decision, and risk as well. And there's also things that you can't really put in a spreadsheet, like what you think the areas, the level of risk of occupancy, um, all those different things. But it's good to have a great sense of the numbers for sure. So that's what we got here. The model, just talking about some other things the model has, we do have joint venture options. It's pretty sweet. I built it so you can do 3 different preferred equity, or just common IRR hurdle waterfalls, or simple pref with a um, or even a pref in common, and see how that looks like for the LP and GP. I thought that was really nice. I've got my most advanced waterfall structures here that you can toggle between and configure, so that's good. Sources and uses, comparables, exit analysis on different exit cap rates. Um, so pretty great model. I've had a lot of purchases on this so far. Great feedback. Looking forward to more real estate guys using this and getting more feedback. I hope it's a tool that's quick but concise, although detailed enough to get you what you need to underwrite as many deals as possible without having to update much of the logic. Now, if you want to purchase this template, you can hop on over to smarthelping.com, and It's in the real estate section on the home page. Just click on real estate. It's actually the first one right here, right now. Now, as I add more models, it'll go down the list, but right now this is where it's at. And you can get it for a one-time fee of 75 bucks if you add it to the cart. I've also done many other financial models for different real estate asset classes and use cases, so you can check those out, or you can just buy the whole bundle for $2.99. And real estate is not the only thing I do. You can see if you go to the financial models tab, there's all kinds of financial models here for many different industries. These are all startup models here. A lot of SaaS and subscription and recurring revenue models. That's like uh, recurring revenue is a big deal right now for a lot of different businesses. So these are all super valuable. Real estate models, joint venture distribution templates for all kinds of different scenarios, general valuation templates, accounting tools. Just recently I did the absorption costing model. That was, I'd say, quite the mental gymnastics I did on getting that built, but that's good for manufacturers or basically any um, business that's producing products and has a lot of overhead. Uh, HR management templates, Google Sheet trackers. I've also done all kinds of different custom work. You can hire me if you want, $275 an hour. I usually get things done within 1 to 2 days. And the typical job on average, well, you can see here, I keep track of my stats live. So for 2025, the average hours spent on a job or per active client was 5.8. The average amount paid per active client was $1,500. Um, so you can keep and that's just the average. So you might be a little bit less than that, you might be a little bit more, but that's just the average of what you might expect if you engage me in a job. I usually do pay as you go, 3 to 5 hour tranches at a time, and I can get quite a bit done in that time if you've got a good handle on what assumptions you want to uh, build out for your business. Alrighty, like and subscribe. And before I forget, you can check out the Super Smart Bundle right here in the sidebar under Template Bundles. The Super Smart Bundle, $4.99. You can get every single template on the entire site and access to everything in the future that I ever build. It's a pretty good deal, I think. So check that out as well, and I'll see you guys on the next one.